Marco here, excited to share with you the marvels of asset-based lending, where anyone, especially you, can get a loan. In fact, the property will get a loan, regardless of what your credit is, what your background is, what your experience is, how much money you have in the bank, the color of your skin, the color of your eyes, if you have teeth or no teeth. It doesn't really matter because the asset is actually going to qualify for the loan and not you. And as a Canadian citizen, I've been doing business in the US for over 20 years. The first 15 years of that, I had no social security number, no credit whatsoever, and bought hundreds and hundreds of properties using none of my credit and, of course, no money because at first didn't have any, and then realized that I never really had to use my money if I just bought the property the right way. So I want to share with you exactly how that's possible, where you can get the money, and how really interesting things can be done with your mind, and of course application of the information that I'm going to be giving you. I want to make sure that you understand that you have to apply the information for this to actually work, and of course if you don't do anything with it, it's not going to make you any money. The only way you're really going to reap the fruits of these tools is by actually you getting involved, and I sincerely hope you do, because there's two ways to make money. One is you can work your ass for money, ass off for money. You can work your ass for money too, but I think that's illegal in most places. Or you can work your ass off for money, get a job, work for someone else, and basically be part of someone else's dream. Or you can actually live your own, because chances are if you don't follow your dreams, you're probably going to work for someone that did. And I don't necessarily want that for you. I want you to have more choices, have the opportunity to make more money, because there is an endless amount of money out there. In fact, there is an unlimited amount of money to be had. And if there's an unlimited amount of money to be had, why is there a limited amount in your bank account? And the answer is behavior. If you don't behave in a wealthy way, you're going to stay broke. And most people think that time is money, which it's not. Time is time, money is money. But wealthy people have told you, programmed you through school and through a lot of programming that time is money, which it's not. And wealthy people pay for your time, so they have all the time in the world. Because most wealthy people have other people do things for them. And I want to really enable you to have and empower you to have the opportunity to change that cycle and actually not have your money work for you, but other people's money work for you. Because again, you could work for money, or you can have money work for you, and it doesn't have to be your money, it can be other people's money. So this is the whole point. Now, what a asset-based loan is a loan that is that's based on the income of the asset or the value of the asset. Now, if you're in residential real estate, which I don't do much anymore of, it would be like a hard money loan, meaning that someone lends you, if the property is worth $1 million or $500,000, or let's say $100,000 to keep the number small, you can get a $70,000 loan or $65,000 loan all day long, and if you don't pay, they take the property back. It's that simple. Doesn't matter what your credit is, you just don't pay them, they get the property back. It's that simple. But it's a high interest loan, which is fine. The key is, can you pay the monthly payments, the mortgage, with a high interest loan? The answer is yes. If it's in commercial real estate, it's actually a lot easier to do that. And there are a handful of commercial asset-based lenders that will lend money at reasonable rates. I'm talking 9 to 11%. And as long as the cash flow supports it, you can actually do it quite easily. So I'm going to use a very simple example of property that grosses $300,000 a year. If you're not familiar with my material, we use a lot of commercial, we basically use commercial properties to get these asset-based loans, because you make more money in commercial property than you do in residential in many cases. And it's very easy to figure out value, because something that grosses $300,000, which is all the money that it collects for an entire year, you'll keep around half for expenses. So it's all really easy as well to figure out what your take home is. So your $150,000 will be approximately your net. And in most parts of the United States, that property is worth around $1.5 million or more. Now, if this would be in Los Angeles, it'd be worth well over $3 million. If it would be in Chicago, it'd be worth well over $3 million. But in most parts of the country, it'd be worth at least $1.5 million. And an asset-based lender will give us 70% of the value of this based on the cash flow, which would be around $1.05 million. So our budget is going to be around $1.05 million. which means that if I buy this particular property that's worth around $1.5 million, if I bought it for $1.4 million, and I know I can get 1.5 without checking my credit, without checking anything. Again, if I don't pay, they take the property back. Now, if I bought this for 1.4 and I know that my budget's $1,050,000, I'm going to have to bring $350,000 to the table. If I bought it for 1.3, I'll have to bring $250,000 to the table because I know I get $1,050,000 from the bank. That's an asset-based lender that doesn't care what I bought it for. They just know what they're going to lend based on the value of the asset. So if you understand this process, if I buy it for 1.1, I'll have to bring $50,000 to the table. And guess what? If I buy it for $1 million and roll in my closing cost of $50,000, I'll get $1,050,000, which means that I have zero money out of pocket. I don't need any money. I didn't need my credit. I just had to bring the right deal to the table in order to qualify for 100% financing because I get $1,050,000 based on the value of the loan, not what I buy it for. Extremely important. So if I'm buying retail, which is what most people are doing all over the country, they're buying something, it's worth that, so they pay that, which doesn't make any sense. Because in real estate, you make money when you buy it, not when you sell it. If you buy it right, you're always going to be okay. So no, I'm not going to buy a property that's worth $1.5 million for $1.5 million. I'm not going to buy it for $1.4 million because that means I have to put money into my pocket, out of my pocket. I'm not going to buy it for $1.3 million or even $1.2 million or even $1.1 million. I'm going to buy it for $1,050,000, in fact, less than $1,050,000, and roll in whatever the closing costs are because there are recording fees and doc stamps and title company fees and blah, 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 which could be $50,000. So I'm going to buy it for $1 million and roll in my closing costs. So guess how much I have to come up out of my own pocket? Zero. That is correct. It doesn't affect my credit because I'm not personally guaranteeing anything. This is very important to underline. I'm not personally guaranteeing anything. It's the property that's getting the collateralized, not like, just like a house mortgage, except they don't need a personal guarantee because there's so much equity in the property. It's like a hard money loan, okay? Basically, but with lower interest rates. It's not going to be 12, 13%. It's going to be closer to 9, 10, 11%. Now, that sounds high. I would never pay 9, 10, 11% for a personal residence because there's no cash flow in a personal residence. But in this case, the cash flow is around, actually, I know it's $150,000 a year, just so you understand the math. The cash flow is $150,000 a year. At a 10% interest rate, it's going to be around $105,000 in interest per year. That's around a 10% interest rate. It'll actually be less. I'm still making $45,000 a year of passive income. That's the spread. So if the gross is $300,000, I net $150,000. My debt service, how much the mortgage is going to be, interest only, is going to be around $100,000 a year. I know it sounds a lot, but who cares? I don't have any money out of my pocket, and I'm netting $150,000. I still make $45,000 a year. And of course, the objective is to, if you learn how to do this, which is again underscore, you must learn how to do this. If you improve the property, when you refinance it, what will happen, you'll go from a $45,000 a month payment, and once you own it for a year, you increase the revenue, because we're only going to buy assets, A, at a discount, and B, that we can improve revenue. Let's say we improve the revenue to $170,000 net per year by improving very small things. This is what I teach. This is what I do for a living all day long. And we get 70% of that. I believe 70%, let me just get my trusty dusty calculator here. All right. Is around 1.2 million. So we bought it for $1,050,000 and we have 1.2 million. We're pulling out $150,000 tax-free cash. All right, 150,000 tax-free cash on the refi. So we bought it with none of our own money. We made $45,000 a year. Check. We refinance it, and when we refinance it, obviously we borrow more than as much as we can, 70% of its new value, since we've improved it by raising the rents and lowering the expenses. Not that hard to do if you know how, which is why I teach and what I teach. And we pull out around $150,000 tax-free, and that's about a year. So how hard do you have to work right now to make $150,000 a year tax-free? Most people never really save that much. And the property is actually generating that instead of you generating that. You work once and you get paid on a monthly basis. It's really phenomenal. And I don't know why more people don't do this. Maybe it's fear of loss. What are you losing? Nothing. You don't have anything to lose. You don't have money to lose. You're not using your money. You don't have credit to lose. You're not using your credit. You're losing time and working a job you maybe don't like anyway, and you're not getting any younger. So you might as well do something that's going to take care of you instead of you having to take care of it. Because if you're sick, you're still making this $45,000 a year all the time. You're not the one that has to work. Your tenants are doing the work. And the beauty of this, we're pulling out 1.2 at 5% over a certain amount of years. Your payment's going to be around $70,000 a year. Now remember, we increased the revenue to 170. Our yearly payment to the debt service is lower. We're paying less interest. We don't owe less, we actually owe more, but our interest rate goes from a 10% interest rate to a 5% interest rate. So now we're paying around $70,000 a year, even 75, even 80, all right, if we want to accelerate the mortgage. We're still making $90,000 a year now after the refinance, after we've pulled out money. So we made $45,000 the first year, we've refinanced it, pull $150,000 out, which is great, and we still make $90,000 a year, because remember, we make $170,000 with a new net income because we've improved the property. We have to pay off the debt of $80,000 a year, and in 25 years that thing's paid off. So your kids and your kids' kids will enjoy this paid off, which means that it'll make $170,000 a year for them, in fact more, because rents increase. And the last thing we want to do is disappoint our tenants because they're expecting it. So we might as well increase the rents as time goes on. It's just how it works. Inflation. So this thing is going to get paid off, and you're going to make a passive income of around 90 grand. Now do one of those, do two of those, do five of those, do 10 of those. That's $1 million a year in income. And you don't really have to improve much out of your life other than just learning more and applying this information. So by understanding asset-based lending and understanding how to buy assets at a discount, and we're buying 1,500 units plus a year. If you follow me on Facebook or follow me on any social media, you see we're doing this all the time, and I really would love to empower you to learn this stuff. And it's not that hard. I'm going to say that it's very simple, but it does take effort and it does take time, and it's not get rich quick, and there's some skills that you need to learn, and if you're willing to learn them, you don't have to work for money anymore. Money can work for you. I hope to see you soon.